Hi, this is Charlie giving you Tuesday's video. Normally gets videoed, emailed out Wednesday. Now, slightly different video this week. It's all about the dollar, and is the dollar going to crash? Is probably something like the headline that I probably will have put to this. So, is the dollar going to crash? Is the dollar going to deteriorate over the coming next year, 2 years, whatever? So let's just have a look at it, maybe a bit more from a technical perspective. But certainly from there's always fundamental things going on as well, and you could certainly say that at the moment, trade wars, it's very popular and topical at the moment with trade wars on. That is the dollar. Is there an incentive to devalue the dollar at administration level? So maybe there is. We can't speculate too much on that, and there's all sorts of reasons why the dollar, from a fundamental perspective, if the global economy was to start to underperform, then could the Federal Reserve cut interest rates more? But then again, that would likely mean that other economies would be cutting interest rates as well. So the bottom line is, let's not worry too much about the fundamental arguments, because there's always arguments on either side, and certainly from even when we're looking at trade wars and the likes. But let's just have a look at some charts and have a look at the dollar index. So I've got a monthly chart here of the dollar index here. This is on TradingView charts here, and as we can see, it's overall been an upwards trend since 2008. Overall, with some decent retracements at times, made this high up here. Made this high up here, broke this previous low here, and is yet to make a new high just yet. So from a technical perspective, it's broken that low, but it's yet to take this high out. So we still don't know for certain whether the dollar index is in full bullish mode, i.e. it's not continuing to make higher highs and higher lows just yet. This is on a monthly chart, mind you. Let's just take this out more into so you can see a little bit more of what's going on. Gives you a better perspective. Sorry, adverts coming up on this chart. Gives you a better perspective of where the dollar index is. Technically, it's been very good. It came back down, retested these prior highs down here and all of that. But nevertheless, it's had a good run, but it's still not confirmed yet by breaking up back up certainly above 100, and then we've got that 102 zone up there to 103. So anyway, as far as I'm concerned, I think the jury's out as far as the dollar index is concerned. Now, I think is more of interest to me is when I look at something very similar to the dollar index, and that's an inverted chart of the euro. So an inverted chart of the euro is what I've got here. Excuse the lines because I've got various horizontal lines on my chart and trend lines. But what I've got here, this is an inverted chart of the euro, and sometimes you can get a slightly better perspective by looking at an inverted chart versus the index itself. And because the euro dollar currency pair is very heavily weighted towards the euro. So an inverted chart of the euro looks very similar. Sorry, I've just deleted the dollar index now, but it looks very similar to the dollar index. In fact, if I just I'll bring up another chart here at the moment, change that to a monthly chart, and I'll show you what I mean. Okay, so let's change this to a daily chart. Look at this as the daily inverted chart of the euro dollar, and now if I bring up the dollar index, can you see how similar that is? If I can take this down a bit, you see how similar that chart is there to that of an inverted chart of the euro dollar. So you get a really good perspective there. Take that off, look at the euro dollar, then look at that. Very, very similar price action. So I quite like to look at an inverted chart of the dollar index at times. Now, if I take this back out to a monthly time frame, then you can see we're in this huge pattern here with regards to this big wedge, triangle pattern, whatever you want to call it. So looking at this, this upper trend line, which is actually, remember this is inverted, I'm going to change this around again soon, this chart, dates all the way back to 2000, that's where that started, and then this the the lower one down here started in 2008. Now, if I was just looking at this chart as a technical analyst, I would be looking at this chart and saying, okay, which way overall do you think, which one do you think is most likely to break? Which trend line do you think is most likely to break? I would say to you, this one. So why? Because this one's the steeper trend line. This one's a longer period, and it's more of a gradual move, this one. So normally the steeper the trend line in technical analysis, the more likely it is to break. So looking at this pattern, I would look at this one. Now obviously we're not at this one at the moment, we're at the bottom one, but I still see that potential for a push towards this line here, in which case, if I now invert the chart back to the way it should be, now this is the euro dollar in normal form, that would mean that the euro dollar should want to bounce up towards this line here, and if it's going to get up to that line, then I'd ultimately want to see it break that. Now if the euro dollar is going to do that, that means that the dollar itself would have to be weakening. Don't ask, it doesn't matter about the fundamentals. That's not the argument I'm putting here to you today. I'm not worried about the fundamentals or going to talk about the fact that the Eurozone's got all these issues, it's got Brexit to deal with and everything else. It doesn't matter. What I've found over the years is that very often at times of markets having turns, or even when the early phase of new trends, the fundamentals don't marry up with it. They marry up with it, once it starts getting moving. So I can't see what the fundamental reason is right now for the euro to appreciate like that. I'm just offering you a view here, a technical view, to say why I can see, how I can see from looking at this chart, price could want to go up. Okay, it doesn't have to. Maybe it rolls over. That's fine. This is technical analysis, so we're looking at probabilities, not certainties. Probabilities. So there is another factor. There's another factor here which I think is very interesting, and that's gold. So if I bring gold up, now gold, as many of you know, has broken out major technical levels here. If I take this back to a weekly chart so you can see it a little bit better, so we've got this weekly 1360 level. I was long that with many of our swingers back here. Actually, we bought on the pullback down there in April, but I'm out now. So I came out, I don't know, 14, a couple of levels, fun enough, one at 1360, one at 1430 pretty much. So I'm now waiting for my next opportunity to get in. So I had a lovely run on it, but now I'm out and I'm now waiting for the next opportunity. Now the fact that gold's breaking out here, that would normally be normally if gold's going higher, you'd be expecting maybe the dollar to be depreciating, but obviously the dollar's holding firm currently. But could it be, if gold is going to continue going higher, and I'm mega bullish on gold overall, now that doesn't mean to say it just goes up up up. Gold could easily pull back into the 1300s at any time, but I'm generally very bullish on gold. If that is to play out after this consolidation that we've had for the last 3-4 years really, and we've broken out of that pattern, we're looking at gold coming back up to these lows up here, and maybe even up these highs up here, all the way back from 2011 time, 11, 12, these highs back here. Then that means gold's got that potential to maybe run all the way up to these highs. And if that's the case, it could well be that in order for that to happen, we have to see maybe a weakening dollar. Again, I don't need to worry about the fundamental reasons why these things may play out. I'm just offering you a maybe an alternate view here of what could play out over the coming, possibly over the coming years. These sort of things, we're looking at big picture charts here. We're not looking at daily charts or intraday charts. We're looking at big pictures of what may occur. So I'm just giving you this this viewpoint here, saying actually look at the euro dollar, look at things like your correlations, your intermarket analysis with gold and the likes, to say actually, I wonder whether there could be a technical reason why this euro dollar could go higher, and therefore the dollar itself start to depreciate. Think about the fundamental arguments. I'm not giving you all the fundamental arguments as to how the dollar could depreciate, but there's plenty out there as to how it could happen. I've given you some idea as far as trade wars are concerned, but of course, the dollar being the world's reserve currency, I don't see that going anywhere soon. But we're all obviously already hearing of certain countries around the world who would rather trade in euros than dollars in oil contracts and stuff, for example. So there are other arguments out there. So I'm presenting to you a technical view of what could happen to the dollar, and I've picked the euro just to give you a barometer there, because that one is very closely linked when you invert it, to say there just could be a a big reversal coming in that dollar index. I'm not saying it has to be. Maybe the dollar continues to strengthen, in which case we'll see the euro dollar down at 105 in the next year or two. There's plenty of reasons why the euro could go lower, of course, as well, from a fundamental perspective. But I just wanted to present an alternate case for you today. Hopefully that's of interest. As always, if you like our videos, give it a thumbs up, and subscribe if you don't. There should be a little subscribe button come up if you want to see more of our videos and get notified when they come through. Take care for now. Be back as and when.